an IRS lien, that's the kiss of death to a deal. You're just like, my deal's dead. Oh no, what do we do? So what would you say, or what kind of advice would you give to a mortgage broker that saw an IRS lien on a property on a title report pop up? Like, what do they do? Can they call someone like you and you can help? And
unless you're looking at the finances and it's determined that there's a lien or something like that, or excuse me, an installment agreement or a liability to the IRS, the credit report or the title is what it picks up is the liens.
Right.
That could be IRS, it could be state. I think the first thing for a broker is to figure out what it is, who it is.
Right.
And that's sometimes not as easy. Could it be sales tax? Could it be use tax? Could it be payroll taxes, income taxes? What is it? Civil penalties.
Especially for a self-employed borrower.
Especially self-employed borrower. Because, if they are using as a sole proprietor, self-employed, if they haven't incorporated or LLC or anything like that, all of that extra, payroll taxes, sales taxes, use taxes, whatever it might be, is going to hit them on their personal liability. Engaging a professional early in the process, if the borrower is coming and being clear that is an issue to encountering, I think that's obviously the first step in that relationship.
Yeah, sometimes they try to hide it. They're like, yeah, no, I've got no issues with the IRS, and then it pops up, and that's what I'm saying. Like the kiss of death. You're like, oh my gosh, this is like, I was counting on this commission, and now it's gone.
Yeah, and the reality is, and why I think either one, to engage another professional early, or at least have the client bring it up early, is you have to work back that lead time, and to deal with a lien. If you're buying real estate, again, there might be something you can do to either get it on an installment agreement, assess whether the client could get the lien either withdrawn or, subordinated in some sense. It's buying property is going to be a little bit more difficult, but you could get on, for example, an installment agreement, and that might be sufficient for purposes of the lender. All of that is going to require time. So if you've got a fixed date that you're going to close, and you come and it's closing on Friday and you're coming on Monday, and
you see a lien, you're like, oh,
it's not going to happen.
No.
And so the other side, I think, where there's actually more that can be done is on the selling side of it, and an opportunity for at least loan originators to add value to the kind of the whole transaction. Is if the seller has liens, that's something that's going to need to be dealt with for the buyer to get clean title. And that, is an opportunity to get discharges, subordinations, witdraws, something else, and be able to come. Are those
a little faster? So like
they're a little bit faster.
You could get on the phone and deal with it.
Yeah, I mean the IRS does recognize the sense of urgency in those matters. So typically,
plus they're going to get paid, right?
They're going to get paid. Well, not necessarily.
If there's equity.
The two. On the seller side of things, the two that we encounter is typically either subordination or a discharge. So subordination, and this would be on a refi as well. So you actually might have somebody who owns and wants to refi, and it's not creditworthy. The lender in that situation is going to have concerns about being in a second position to the IRS. Yeah. So a subordination, you get a nice little certificate, a letter from them saying, okay, we will take a second position to lender ABC.
How often do they say yes to that? Like the IRS?
I'm not the best judge of that because, we're from our practice frequently. I think that only in rare occasions our clients, completely turn down for those.
It's common sense, right? Like if you're trying to pull cash out to go, on vacation or do something like that's self-serving, like the IRS is going to say no. But if you're getting a better interest rate, you're reducing your debt, they're going to say yes. Like, is it common sense like that?
Absolutely, and that's, I think, the narrative and how you present it too. You're not taking this out to buy a boat,
right? But if you're paying for your kid's college or something, maybe
like an ordinary or necessary household expense. Correct.
Gotcha.
It's still going to be encumbered. I'm going to use this and I'm going to bring my interest rate down from, 10 to 5 and the difference of my monthly payment, I'm going to free that cash up and I'm going to be able to pay you, Uncle Sam, a little bit sooner.
Gotcha.
So yeah, they do recognize that, and it's a little bit freer.